these prices. So you're going to see a little bit of resistance in the $33 area and up at 48. But what is driving this breakout, these prices surging in silver? And so $50 silver, $100 silver, it isn't going to raise the cost of each solar panel by that much. But when you get up to $700 silver, they're going to be really trying to conserve on this, or it may even slow down the sale of solar panels. This is from Just Dario, and he says 409 to 1 is the paper to real silver. So you've got
Mike Maloney, founder of goldsilver.com, recently emphasizes silver's breakout to $39.33, its highest level in 14 years, as a sign of a major market shift. This rally, driven by both technical and fundamental forces, reflects weakening resistance from the 2011 peak, where many investors have already exited or now hold for far higher prices. With major selling pressure behind, only moderate resistance at $33 and $48 is expected ahead, paving the way for continued upward movement. Silver's rise to $38 marks the end of a long stagnation and highlights its lag gold over the past decade. In real terms, the 2024 price of $38 still trails the inflation-adjusted equivalent of $54 from 2011, suggesting significant upside potential remains. Together, these factors support the view that silver's current rise is not just a short-term bounce, but possibly the beginning of a broader, longer-term revaluation. Mike Maloney highlights the rising role of silver in the solar energy sector, noting that silver use in solar panels accounted for 16% of global supply in 2023 and is projected to reach 25% by 2030. This growing demand isn't just due to more panels being produced, but also because each panel is using more silver. Supporting this, the Silver Institute reported a record industrial demand of 654.4 million ounces in 2023, largely driven by clean energy applications. While silver prices at $50 or $100 wouldn't greatly impact panel costs, Maloney cautions that a surge to $700 could force manufacturers to cut back on silver use or slow production. Together, these trends reflect how the booming green economy is both fueling silver demand and making its price more influential in the renewable energy space. Before we dive into the video, make sure to like and share it. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update.
July 22nd, and today, silver set another 14-year high and closed at $39.33. So what is driving all of this? I've pointed out many times, we've got some very weak resistance back here from 2011. And this resistance, most of the people that bought back then, they either sold or they're hanging on for higher prices. So there's not going to be a lot of selling coming into the market from these purchases way back in 2011. This is going to be weaker technical resistance, the people that read tea leaves and goat bones. When chartists all are looking at the same thing, it becomes a self-fulfilling prophecy. Too many people are going to be placing sell orders right at around these prices. So you're going to see a little bit of resistance in the $33 area and up at 48. But what is driving this breakout, these prices surging in silver? Let's take a look. Hans Attorney says something big is coming in the silver market, and fast. Let's connect the dots. 1. Over the past days, multiple signals have emerged that point to a massive shift in the silver landscape. What used to be a boring, manipulated market is now heating up like never before. 2. Physical deliveries are exploding. On the COMEX, silver deliveries just broke out. Nearly 2 million ounces per day, matching global daily production. Now let that sink in for a moment. On the commodities exchange in New York, deliveries match global daily production of silver, never mind the rest of the exchanges around the world. Industries, investors, and shorts are now competing for metal. Supply squeeze incoming. Now, Alan is going to cover this same tweet in another video, and he's going to verify all of this and analyze it for you we don't want to spread any misinformation here. So we're going to be verifying you all of this and giving you the correct information. 3, LBMA's silver reserves are critically low. TD Securities reports only 155 million ounces of free float silver remain in London, the lowest in recorded history. That's not a typo. The vaults are drying up. 4, EFP and OTC markets are dislocating. I hate it when people use a bunch of acronyms. What's an EFP? That stands for exchange for physical, and OTC markets are dislocating. Silver lease rates are spiking, 6% plus premiums widening. A perfect storm is forming in both commodities exchange and London. OTC is getting dangerously tight. This isn't normal. 5, China's top coin market is going into overdrive. I'm going to skip this one. It's about a specific collector coin, and there's a problem in the math here. So Hansa, you may want to double check the math. 6, speculative capital is flooding in. Retail and institutional money are finally noticing silver's setup. Tight supply, high industrial demand, no excess mining capacity, ridiculously cheap compared to gold. They're buying, and fear of missing out is real. 7, tariffs and geopolitics add fuel to the fire. The U.S. just slapped a 30% tariff on silver from Mexico and the EU, who supply over 25% of U.S. imports. This could trigger a supply chain panic and price spike. 8, what does this all mean? We're not just looking at a price rally. We're witnessing the early stages of a structural breakout, one that could end decades of suppression. I hope so. 9, TD:DR. I'm not up on all of this stuff. I had to look that one up too. It means too long, didn't read. So this is a synopsis of the whole tweet. Physical market is on fire. Inventories vanishing. Demand surging. Geopolitics tightening. Price finally reacting. Silver awakening is real. Are you positioned? Personally, yes, I've been planning on this now for more than 20 years. Mr. Yuppie, it's literally impossible to borrow silver right now. The shorts are shissing their pants. God, do I ever love seeing short funds burn to the ground. And you can see this is the borrow rates for SLV if you want to short silver on SLV, and it just had a huge spike. Tavi Costa says silver lease rates are surging just like platinum did before its major breakout a few weeks ago. If you ask me, if it looks like a duck and quacks like a duck, so the silver lease rates above 6%. Silver demand for solar panels 2023 versus 2030. I want to point this out. Conservative projection. So you had about 16% of global supply going to solar panels, and here you've got 25% is a conservative projection. Now there's not that much silver in each solar panel, and so $50 silver, $100 silver, it isn't going to raise the cost of each solar panel by that much. But when you get up to $700 silver, they're going to be really trying to conserve on this, or it may even slow down the sale of solar panels. This is from Just Dario, and he says 409 to 1 is the paper to real silver. So you've got 400 people dancing around on the Titanic for each seat in a lifeboat. Now this is futures, options, swaps, forwards, derivatives, and ETFs. So it's everything.
According to Mike Maloney, as of this year, the S&P 500 has recorded a modest gain of 6.11%. In contrast, gold has surged by 28.77%, reflecting increased demand amid economic uncertainty. Silver has outperformed both, rising by an impressive 31.51%, driven by strong investor interest, inflation concerns, and a tightening physical supply. Analysts expected 6.7% earnings rise for S&P 500 companies in Q2, largely driven by big tech. According to LSEG/B/E/S, Tom Hainlin noted most firms met or exceeded prior guidance, with no signs of weakening in corporate profits or consumer spending. Maloney further emphasized the contrast between the gold and silver markets, noting that while gold remains relatively abundant, silver is facing its fifth straight year of supply deficit. Compounding the pressure, several banks are short around 400 million ounces of silver. In a move interpreted as an attempt to suppress the breakout, 483 million ounces were suddenly released into the market in just 1 hour. The silver market now stands at a critical juncture, highlighted by the widening gap between physical and paper silver markets. On July 11th, a staggering 483 million ounces were sold short on the COMEX within a single hour. These shorts are now completely underwater, meaning the entities that executed them are facing significant losses and must now deliver physical silver, further tightening supply and potentially pushing prices even higher soon. Let's get back to the interview.
This is from Mr. Yuppie again, just in. Citigroup backing silver over gold. Wow, they have a price target of $43, but what they don't know is that it's going to be a heck of a lot higher than that. So that's their 6 to 12 month outlook, boosted to 43. But what I want to point out is that the 3-month forecast was raised to $40 from $38. Now this was on the 16th of July, and I looked up some other articles to confirm that the 16th is the day that Citigroup made this announcement that they're upping their forecast to 40. But the S&P 500 is up 6.11%. Gold is up 28.77%, and silver is up 31.51%. Nostradamus says, I don't know who needs to hear this, but gold is in plentiful supply. Silver is in its 5th year of deficit, and a few bankers are 400 million ounces short. They will need to find somewhere. This is from Enough. 483 million ounces of silver were dumped into the market yesterday in an hour in an effort to stop this breakout in silver. If you take the performance of these different items, their percentage change from January of 1980 until 2022, the Consumer Price Index would put silver at $200 per ounce. If you're comparing it to a single-family median price home, $468. The stock market, $2,178. The 10-year Treasury bond, $1,059. U.S. GDP, the same as real estate, $468. Currency in circulation, $971. M2, $781. And the average of all of these was $921. And I said, I don't think it's going there, but this is a possibility, this range of things. So that 781, maybe that's not too irrational when you see what I've got coming up. So this is Value Seeker adjusted silver for the M2 currency supply growth, and this was on July 14th. Silver was at 38.89, and when you adjust it for the growth of the M2 currency supply, you end up with close to $520 per ounce silver. That was the price in today's devalued dollars of silver in January of 1980 when it peaked. John is only applying U.S. government methodology, what they used to use, because he was an insurance actuary, and everything started to calculate wrong after 1982, and he wondered why. He went back and found out that the U.S. government had fiddled with the inflation statistics in order to do things like screw Social Security recipients out of the full amount that they're owed. It doesn't keep up with true inflation. Is anybody ready for $2,000 an ounce silver? That's what I want to know. But always remember, silver is a bad investment, at least according to this guy, Dave Ramsey. When he said it, it was $24. The last time he said it, silver was $24 and gold was under $2,000.
Silver is quickly becoming a key player in the clean energy shift, especially as demand from the solar industry surges. Mike Maloney pointed out that silver's role in solar panel production is growing. Not only are more panels being made, but each one uses more silver. Meanwhile, bold market actions, like the sudden release of 483 million ounces, suggest growing concern over silver's tightening supply. Data from 2023 supports this concern, with silver hitting record industrial demand and entering its fifth straight year of deficit. Major banks remain heavily short, adding even more tension to an already strained market. As Maloney explains, silver is no longer just a financial hedge, it's becoming essential to the future of energy. Do you think silver's supply can keep up with the growing demand from clean energy? Share your thoughts in the comments below. Like, share, and subscribe to stay updated, and don't forget to hit the bell icon. Thanks for watching.